Good afternoon and welcome to a special presentation by Charles on the 18th of April 2013. So much has been happening over the last few weeks in the financial markets, and I'm sure many of you are getting confused with the mixed messages from the mainstream media. As you know, Charles is a good friend of mine and is a chief executive officer of a leading bank. Charles will be explaining exactly what is going on.
Thank you, Tony. Before I start the presentation, can you put your hands up if you think we are in recovery? Now then, why does that not surprise me?
Sue, can you put up that article from the Daily Telegraph that states the Federal Reserve upgrades its view of U.S. economy?
Steve, I shall put up my caption regarding my view on the U.S. economy. This is the reality. We are going to fall off a cliff due to all the unsustainable debt.
Charles, you are so negative. All the news points to growth. I am not worried by your scaremongering.
Unfortunately, Steve, there are many people like you who do not know the full facts.
I can tell you that gold has fallen, and that is a sign of a recovering economy.
Steve, I am glad that you have brought up the subject of gold because I want to present a few facts. Did you know that there are 4,500 metric tons of gold that cannot be accounted for? Did you know that on the balance sheets of some central banks, a ledger is displayed for gold and gold lease?
No, I am not really sure what you're talking about.
Okay, I shall explain. Have you heard of fractional reserve banking?
Have I heard of fractional reserve banking? Is the Pope Catholic? Over the last year, you, Tony, and Jennifer have been harping on about it. I can honestly say I cannot forget it.
I have news for you, Steve. There is also fractional gold reserve lending. Central banks have been leasing out their gold, and that's fine until someone wants their physical gold back. Several countries wanted their gold back, including Venezuela, who wanted 99 tons back. The big bombshell is that Germany wants 670 tons of their gold. Half of it from France and the other half from the US. It's going to take about 7 years to ship it all back. Does anyone know why it will take so long to ship back?
Is it because there is so much of it to move?
Steve, you do make me laugh. Think about it, Steve. Some of the gold has been leased out, and that means there is not enough gold in reserve to ship it out all at once. A lot of the gold has been leased to bullion dealers, and this has helped to suppress the price of gold. What happened recently to the gold price has been engineered. Overnight, when trading was thin, big gold contracts were dumped in a very short period of time. This caused the price of gold to fall by $70 per ounce in one day. The only explanation to this is that someone wanted to drive down the price of gold. Why do you think they wanted to drive down the price of gold?
I believe that it was a scare tactic for others to sell their gold, as many people would be worried about gold falling further.
That's correct, Tony. The winding of their positions was simply to cause price manipulation. The consequence of this is that the GLD is going to get a lot of redemption calls, and the bullion banks will be looking to build up their reserves following the leasing out of their gold. This move was an attempt to shake out the weak hands.
During the dramatic fall of gold prices, I used it as an opportunity to purchase more gold, as I do not see any recovery at all within the Western economies.
Tony, you are very wise and understand the full picture. The elite use psychology. They are strategists. They plan many moves ahead. The average person tends to go with the flow and will sell their gold when they see the price drops. They have no understanding at all regarding the fundamentals. The mainstream media are giving the impression that we are in recovery. Nothing could be further from the truth. Once the weak hands have been shaken out, the price of gold will rise to its proper market value. The game is up. Countries want their gold back. Central banks will have to cease the practice of fractional gold reserve lending.